Hello everybody, I'm John, this is JP Strategic Investments, and today we're going to talk about Evolv Technology's third quarter earnings report that we just got yesterday. Now, if you watch this channel, if you follow this channel and you're watching this video, you probably already know that I am invested in Patriot One Technologies, a slightly younger company than Evolv, and one of their competitors. So full disclosure, that is the main reason that I am covering this earnings report. Now, what you might not know if you aren't a member of my Discord server is I did buy some Evolv call options about a week ago, and we'll talk about a little bit later on why I bought those call options and kind of what I'm doing with them. So let's get into this earnings report. First of all, they were really strong earnings actually. The TCV, the total contract value, which is kind of one of the main metrics that they use to kind of measure the growth and the amount of contracts that they're bringing in, that actually increased to $16.9 million this year. So that is the amount of contract value that they booked in the third quarter alone. So $16.9 million, up, as you can see on the screen here, about 365% year over year. And it's actually up, if we look at last quarter's TCV was about 10.9 million. So even up about 50% quarter over quarter. So pretty strong growth there. Q3 revenue was 8.4 million compared to 4.5 million last quarter. So strong growth there as well, about 100%, almost 100% growth there. Now, there were a couple things that were kind of boosting that revenue, so they don't quite, as far as their guidance goes, they aren't quite expecting to continue at quite that clip of growth when it comes to quarter over quarter for revenue. And we'll talk about why a little bit later on, but either way, both of those numbers really strong, really good signs for Evolv Technology there. And if we scroll down here, we get another piece of interesting information that we'll talk about this a little bit more, but GAAP net income actually came in positive for the quarter. Now, this is mainly an accounting thing. Their GAAP net income from an operating basis really wasn't actually positive, but they did technically report GAAP net income of $23.2 million or 15 cents per share. Now, the reason that GAAP net income really technically was positive, but really actually on an operating basis wasn't positive, is there is an accounting metric. If we scroll down here, if we look at their operating income, right, their loss from operations was 16 million, right? Remember, these are right here, it says in thousands except for per share data. So this down here, this 16.6 million here, this is their operating loss. But if you look down here again, net income came in positive. The main reason here is this line right here, this change in fair value of contingent earnout liability. Basically, this is an accounting thing in regards to their SPAC merger and how their shares, how Evolv shares have now performed since the merger has happened. It's kind of confusing. I looked into it a little bit, but I'm not confident enough to really explain it to you guys right now because I fully don't understand it. But they mentioned in the earnings call that basically this is kind of just an accounting thing. So actually excluding that accounting metric, right, if we exclude that 31.8 million from their income, they ended up with a loss of about $8.6 million. So I wanted to cover that just in case any of you guys saw that net income line and were like, oh, are they profitable already? No, they're not profitable yet. They haven't really given any guidance on profitability as far as I can tell. But that kind of explains exactly what was going on with the net income there. If we go back up here, there are a couple more things. They did raise their guidance. So if we look at their business outlook for the year ending December 31st, 2021, so this year, basically based on what they've seen or what they saw in the third quarter and what they've seen so far in the fourth quarter, they did increase their year-end guidance. Basically, they kept their kind of lower end of their guidance the same, but increased the upper end of their guidance. So you can see as far as what was issued on August 16th, 2021, they had 53 to 55 million as far as TCV, total TCV for the fiscal year. And as far as total revenue goes, they had 20 million to 21 million. Now we see that same 53 million on the lower end, but 57 million on the higher end for TCV. And again, same lower end for revenue, but upper end was bumped from 21 to 23. So looks like they might be expecting just a little bit more in both TCV and revenue for the quarter. Now, a couple things that happened on the earnings call that I want to talk about. And one of them, the first one, is what explains kind of this number here and why it increased quarter over quarter so much, and why they don't necessarily expect it to increase at that rate going forward. So what they mentioned on the earnings call was that they received actually $5 million plus contracts in the quarter, and a few of them, including, I believe, both the Carolina Panthers and the Tennessee Titans, two of the NFL contracts that they got during the quarter, both of those were basically paid upfront, or at least the products were purchased upfront. So if you guys don't know, Evolv has what seems like two kind of ways to purchase their products on a subscription basis. You can either basically pay for the product up front, buy the product from them. Now it's essentially your product. And then you pay a subscription for the actual software that goes into the platform and actually makes their products work, right? Or what you can do is you can pay a subscription for the entire thing, and essentially you're leasing the products. The products you don't actually own. Evolv retains ownership of the products, and it's a little bit more month over month, and you end up long-term paying more, right? Rather than just buying the products. So some of the larger, customers like the Carolina Panthers and the Tennessee Titans, if they're confident in the technology, they might buy that up front, and it'll save them a little bit more money long term. But what it will do to the revenue is it will increase Evolv's revenue in the short term because there's a bulk upfront payment. So that's why this 8.4 million is so much higher than the previous quarters, about, I think it was 4.9 million. That's why we saw such kind of an increase there. And they're saying that going forward, they don't quite expect that many upfront contracts, especially in the next quarter, just looking forward to Q4 because of the mix that they're seeing in the pipeline. They don't really expect to continue to have that many upfront payments. And so the revenue growth will be a little bit slower. Still, we're probably going to see a revenue growth if all goes as they're planning of, maybe 50%, 75%, but the doubling up, the 100% revenue growth, probably not going to continue, at least in the short term. And that kind of works into the second thing that I want to mention from the earnings call, which was that they don't actually expect to have a lot of professional sports contracts in the next quarter. They mentioned on the earnings call that most of the pipeline that they're seeing right now coming in for the fourth quarter and maybe kind of the quarter after that, most of what they're seeing is more on what they call the original kind of, I think, $18 billion total addressable market that they originally wanted to target, which is basically customers or clients that didn't really already have security because they didn't want to go with the current technology, which is just basically walk through metal detectors, and so they didn't go with anything. So you're talking like hospitals, maybe some performing arts centers, things like that, who didn't want to go with metal detectors, so they're just kind of working with what they got. They may have just security personnel, and that's what they're working with right now. But now that they're seeing technology available like Evolv, they're looking and going, oh, that might actually work for us. So it sounds like they're seeing more of a mix of those types of contracts rather than professional sports going forward. And those types of clients and customers generally have probably a lower cash reserve, and so they're going to go more for the subscription model rather than paying a bulk payment up front. And so I mention that because professional sports, it seems like, are one of the areas where both Patriot One and Evolv are really aggressively going towards. We've seen multiple kind of showcases and pilots going on with Patriot One at different arenas and stadiums. We obviously see Evolv is getting contracts with the Carolina Panthers and Tennessee Titans. And these are major contracts. These are big contracts for them because especially like, if you think about NFL stadiums, you're talking 70, 80,000 fan stadiums. they're going to need to purchase a lot of their systems to secure their entire arena. And so those are going to be big contracts. And so I thought that was kind of interesting because with these big contracts, if Evolv is now seeing a slowdown in these contracts and more of a mix of these other types of customers, why are we seeing that slowdown if they just got the Tennessee Titans and the Carolina Panthers? Now, one of the things that I thought it could be, and this very well could be, a contributing factor or even a major factor, is a lot of these teams are now in season. Really the only out of season team or major league right now we have is the MLB. Currently we have the NFL, the NBA, and the NHL all in season, but we do have the MLB off season, right? And so we could have a lot of those teams looking for technology, and so I just thought it was an interesting point to bring up there. But that brings me to the last thing that I want to mention from the earnings call, and that was that Evolv said that 15% of the MLB and 10% of the NFL are now using their products to scan all fans coming into their stadiums. Now, in the MLB, there are 30 teams, so we're talking 4 to 5 stadiums now that, if that's correct, are using Evolv's products to scan all of their fans coming into the buildings. And as far as the NFL goes, there are 32 teams, so we probably have 3 to 4 NFL teams using Evolv's products to scan all fans coming into the building. So there are a few things that I want to talk about here. One, that's a pretty good foothold for Evolv in professional sports, especially when you think NFL and MLB, those both have, average on the higher capacity for fans. When you think NHL and NBA, both of those leagues have maybe a third and maybe even a quarter in some cases of the actual capacity in their arenas that an NFL or an MLB stadium would have. So their foothold is not only in professional sports, but it's in the kind of higher capacity stadiums, which is where you want to be, right? And 10 to 15%, it's not a huge amount, but it's a pretty good amount to start with. The other thing that I want to mention here, and this is where, I want you guys' feedback in the comments because I'm still trying to kind of work this out myself, is Evolv really didn't have any professional sports presence, or really even wasn't going at it aggressively up until about a year ago. They mentioned that in the earnings call. And for these stadiums to, in less than a year, sometimes with very, it seems like very small piloting period, completely transition their stadiums from walk-through metal detectors to Evolv's products, that seems like a pretty big switch there. For those of you that have been watching my channel who more so follow Patriot One Technologies, we've heard a lot about, the stadiums want to really take it slow and test these products. They want to pilot them, then they want to maybe start off with 1 or 2 entrances, get that down maybe for 6 months, for a season, maybe start off with some more, and then move to, okay, we're confident enough, we're ready to switch. With Evolv, it seems like this is a really quick process. So this could mean a few different things. One, it could mean that Evolv's products are just that much better. I've tested both of these products myself though. I've gone to presentations, I've talked with representatives from both companies, and it doesn't seem to be the case though for me. For me, it almost seems to be the opposite. Now, I am biased because currently I have more of my money in Patriot One than I do with Evolv, right? But that's just my personal opinion. The second thing that it could mean is they do have a little bit of a head start, and so they could have more connections and they could be marketing this better, right? That could be happening here, right? They have more customer wins to lean back on. That could just be contracting the sales cycle and really speeding up the process for them. And that's kind of the reason that I'm kind of leaning more towards right now. The only other thing that I can think of right now is maybe, and again, this is just speculation, maybe Evolv's products are just much more similar to walk-through metal detectors than Patriot One's products, and that's making it easier for these companies or these stadiums to switch from a walk-through metal detector to Evolv's technology than it is to Patriot One's technology. Now, to me, that's actually a negative for Evolv long-term, because that would mean that Evolv's products really aren't that much better than a walk-through metal detector, right? And this is one of the reasons why I'm really interested to see what NCS4 comes out with their data, because they just recently evaluated Patriot One's MSG and the Evolv Express in separate locations, different venues, but they're pretty much going to be using, as far as my understanding, the same standards to evaluate both systems. And they're supposed to come out with a report later this month on how each of those technologies performed in those scenarios. So I'm really interested to see what comes out of that report, because that will give us a much better idea of how these two platforms stack up against each other and how similar or dissimilar they are to walk-through metal detectors. One last thing before I close this out, I did mention that I bought Evolv call options about a week ago, and for those of you that are Patriot One shareholders, I don't want you guys to freak out and go, oh, he's not as confident in Patriot One as he was before. This is mainly just a hedge, and so if you aren't in my Discord server, I'll just show you exactly what I said here. I put all of my trades that I'm making and the kind of reasoning behind them in the trade notifications section of my Discord server. The invite link is in the description of all of my videos, so you can go join that if you want to. Basically, I say here, bought some Evolv calls for December, so I bought the 750 calls for December. And they are just as a hedge and an earnings bet. To be very clear, I am no less bullish on Patriot One. This is simply a small hedge in two ways. First, because Evolv is reporting earnings next week, and a good report from them could boost the stock significantly, which it did, right? They were up at one point over 22% today. The other thing is it could be negatively interpreted for Patriot One, which we didn't quite see as far as the stock performance today, but just in case, right? And so a hedge in that way. Also, second, in case the information released with NCS4, which is the reports I was just talking about, shows that Evolv may be just as good or better than Patriot One, which again I think is unlikely, but just in case that happens, it is a hedge there, because that could again boost Evolv stock and hurt Patriot One stock. So just as a hedge there. And I mentioned there just at the end, for perspective, my Patriot One position makes up over 16% of my portfolio now, and these call options make up less than 1%. As far as today, they're almost over 1%, because again, Evolv went up 20%. Now I did, as I mentioned down here earlier today, I sold 20% of those calls because they increased over 200% today, or close to 200%. But I wanted to keep most of that because based on Evolv's earnings, I think the stock could go higher. And also, I just wanted to keep that hedge going forward, at least until the reports come out from NCS4 as far as, you know, how those platforms both compare against each other. So that's kind of the main things that I'm looking at. If you want to join my Discord server, again, the invite link is in the description of all of my videos. As always, if you guys have any questions or comments or anything like that, leave those in the comments below, and I will see you guys next time. Have a great day.